Hello, everybody, and welcome to the FDI podcast, the podcast brought to you by FDI Magazine. 2016 was a year of uncertainty. Political events like the Brexit referendum in the United Kingdom or the presidential elections in the United States delivered surprising results and turned upside down expectations of consumers and investors alike. Nonetheless, Greenfield FDI worldwide kept growing as investors chased opportunities elsewhere, particularly but not exclusively in fast-growing markets in Southeast Asia. I'm Jacopo Dettoni, Deputy Editor of FDI Magazine, and your host for today's episode of the FDI podcast. I'm here in our studio in London, joined by Courtney Fingar, Editor-in-Chief of FDI Magazine, to discuss a few key highlights from the 2016 FDI report, where we crunched and analyzed the figures for Greenfield investment announced worldwide in 2016. Thank you, Courtney, for being on the show today.
Thank you.
Courtney, we widely reported on the events that made 2016 such an unpredictable year. Now we are finally in position to assess the impact of these events on the global investment cycle. So if we look at a broader picture, were foreign investors affected at all by all this uncertainty?
Well, Greenfield foreign investors seem to have held their nerve despite a lot of the political and geopolitical ruptures that we saw last year. Headline FDI flows decreased last year, meaning if you include M&A, portfolio investment, as well as Greenfield, there was a global decline. But when you pick that apart, what you find is that it was a big global decline in mergers and acquisitions that actually brought down the headline figures. If we look solely at Greenfield investments, so new physical facilities being set up somewhere or expansions of existing facilities, we recorded a more than 6% increase. I think that's not a spectacular growth, but under the circumstances, I think it's pretty solid. And what that suggests is that despite uncertainties, companies are still in search of new markets and are still setting up internationally.
So Southeast Asia expectedly was, again, the largest recipient region for FDI. So what are investors looking for? Are they still looking for opportunity to produce at a competitive cost and export, or also that there is a sort of a paradigm shift?
Well, Asia is still the most successful FDI region. Asia Pacific as a whole soaked up some 45% of global capital investment in greenfield projects, which is pretty staggering if you think about it. And in general, companies are looking for growth. Foreign investors love growth markets, and they're often chasing growth. And what we saw last year is a race to get opportunities in some of the fastest growing economies in the world. That's why India, for the second year in a row, was the number one destination for greenfield capital investment by pure volume because of the growth trajectory that it's on. Now in China, of course, the growth has plateaued a little bit and some of its cost advantage has been eroded away. But with it being still such a vast consumer market and actually managing to upskill and increase its strengths in some higher value added activities, it's still, an FDI player of some weight. And of course, it's worth remembering that even though the growth in China has plateaued by any normal standards, it's still quite a high growth market. And so I really think that's the story globally as well as in Asia. I mean, companies will always be looking for different things depending on their particular situation and even their sector. But in general, what foreign investors like is as much certainty as they can get, growth trajectory, and the right mix of cost and quality. And a lot of markets in Asia are still providing that.
Well, I think it's important also when we talk, for example, about India, to highlight the stability that investors also now can find in a country like India. Prime Minister Modi has showed the commitment and the authority to push through in very, very bold and ambitious reforms like the demonetization or the goods and service tax that they are implementing now. So in a way, on the one hand, we have the Western world, the US or Europe, where we see, and we still experience a lot of political uncertainty. Mm-hmm. The recent elections in the UK are just another example of that. Whereas on the other hand, there is a country like India that has always had somehow a name for an inefficient political elite that now has found stability, and investors seems to be liking it in a way.
Quite. And one of the most interesting things that happened last year with all the political developments is I think the very concept of what is a safe haven for investment has been completely upended. Throughout the financial crisis and all the rocky years of the global economy, countries like the US and the UK were the most reliable FDI performers because in times of uncertainty, investors would do a flight to safety, and these were considered the safest markets possible, along with Canada and a few others. But now the US, of course, it's still the number one destination by sheer number of projects, and there's no assumption that investors would abandon an economy like the US. However, the Trump presidency has been nothing but erratic and unpredictable. So I don't think for the moment that we could class the US as a safe haven at all. And then, of course, the UK, which has been the leading destination in Europe by a long shot of attracting FDI, has now taken away its own status as a safe haven by undoing decades-long trade and immigration agreements, of course, with its largest partner, the EU. And that's an uncertainty that's going to go on for a minimum of 2 more years. And that is, I think, causing companies to question the predictability of these two markets right now.
And in the specific case of the UK, we're already seeing in 2016 figures a sharp decline in greenfield investment from the previous year. Correct?
That's right. I mean, Brexit is already biting the UK's FDI inflows because, of course, while the referendum happened nearly midway through the year at the end of June, the uncertainty leading up to the referendum caused some investors to wait and see. And of course, then the result has put an immediate dent. I mean, what we tracked was a 42% decline in estimated capital investment in the UK last year, which is really quite a staggering decline.
The United States, on the other hand, obviously this is a report that takes into account figures for 2016. So President Trump was elected in November, so likely there hasn't been much of an impact on the 2016 figures from his election. But looking forward, what do we expect there? What are the main sources of the big question marks for any investors looking at the US market right now?
Well, as you say, it's a little early to tell, but just taking a glance at the very initial investor reaction, we compared, for example, inward investment going into the U.S. in January 2017, which of course was the month of the election, or month of the inauguration rather, and a few months after the election. And we actually saw something like a 40% increase in investment that we'd tracked in the January previous. Now, with greenfield investment being a long-term game, it takes some time to see how these trends play out, so we can't read overly into that. But at least it is an indication that companies had an initial burst of optimism about the Trump inauguration. And I think this is because some of the policies, for example, reform to the corporate tax, other measures to entice capital back, like capital repatriation and incentives that might come around that, companies actually rather like. I think what we have to watch out for the long term is the impact on immigration policies, for example, which could threaten access to talent in the U.S. market, and various other factors that might take some time to play out, to say nothing of any potential renegotiating of NAFTA and other trade agreements.
Looking at the figures, 2 particular countries, they stand out to my eyes, and they are Iran and Argentina. And again, here there is a big political component for the fact that these 2 countries, after many years when they've been basically completely off limits for investors, now they managed to track a pretty solid figures in greenfield investment. Iran was over 12 billion of greenfield investment, and Argentina was over 11, almost 12 billion of foreign investment. And again, obviously, Iran, there was the whole developments with the nuclear agreement with the Western countries and China, and they lifted the international sanctions, even though the sanctions by the United States have not been lifted, but still we've seen a lot of investors from Europe and elsewhere trying to find opportunities in Iran after so many years. And Argentina pretty much happened the same with with the new president Mauricio Macri, the country seemed to kind of came to term with its sort of troubled past and agreed all the terms with the hedge funds in New York. And so basically, again, the potential as Argentina has always been considered very in high esteem by foreign investors, and now finally seems to be able to realize this potential.
Yes, it always seemed in the case of Argentina that politics was just in the way of the clear economic and FDI potential that the country has. So I think there probably is some optimism and hope that barrier is being removed. And so I think that's definitely a market to watch this year. Iran, of course, there's huge excitement about that. There's always massive interest in a country, also a country that's a fairly large market with energy reserves and everything else that's been closed off from the international community for so long. And I know that companies are watching that pretty actively. I guess the wild card there is whether the Trump administration very likely might pull back some of the sanctions that were due to be lifted, and some of the engagement that we were seeing under President Obama is probably going to go in the opposite direction, with Trump being quite bellicose against Iran. So that would clearly hit U.S. investment into Iran, and very often the EU doesn't necessarily do every sanction that the U.S. does, but very often follows it, as does the U.K. So I think we have to see whether politics or geopolitics gets in the way again of Iran's potential.
All right. Well, thank you very much, Courtney, for being on the show today and for these insightful comments. Everybody can download the FDI report on our website, fdiintelligence.com. In the next episode of the FDI podcast, we will actually discuss further the issue about Brexit and all the implications coming from this, again, surprising results in the elections in the UK. So what this all will mean for the negotiations, the Brexit negotiations moving forward, and how will they impact the strategy of the UK government for the upcoming Brexit talks. Thanks again, and stay tuned.